In this video, I'm going to be explaining how I do my taxes as an Uber Eats driver or somebody that is self-employed. This is the kind of video that I think 18, 19, 20-year-old Jack would have really appreciated. And I'm hoping this video today will be the most informative video I've made thus far on my channel. I've left multiple timestamps throughout the video so you can easily navigate to different sections, and you can always come back and refer to this video if you forget something or you're curious about a specific thing. Now, before continuing with the video, I do want to clarify and just let you know that I am not a tax advisor, accountant, or I don't have any qualifications related to tax in any way, shape, or form. However, I do regard myself as somebody that is somewhat proficient related to taxes, as I've been doing it as somebody that's self-employed for the past 3 years. And I want to make it clear as well, please do not interpret or consider this video advice in any way. And throughout the video, I'm just going to be trying to provide the information in the most simplistic way possible that I think an 18, 19, 20-year-old Jack would have been able to understand. For a bit of context, if you haven't seen my videos before, I'm 22, so I'm just referring to my old self that didn't know this information a couple years ago. So with that all said and done, I'm going to be starting this video by assuming you have literally no understanding of how taxes work. And I'm assuming most people watching this video will have an understanding of how taxes work, but I do know there's a decent likelihood that there will be some people that literally have no understanding whatsoever, because when I was 17 years old, although I wasn't prepared to admit it, I pretty much had no knowledge of how taxes work. I didn't learn in school. My mum didn't really tell me, and not really any of my peers taught me in a really simplistic way that I understood. So if you're in that position, don't worry, I've got you. Let's talk about it and start from there. So I think the most simplistic way of explaining it is basically if you earn any money whatsoever, the government is going to want to take a percentage of that money that you earn. And the reason why this happens is so that the government can fund essential services. For example, this will hopefully enable them to enforce the law, fund public services, and also maybe the salaries of essential workers like nurses, teachers, doctors, firemen, etc., etc. And from what I know anyway, every single country will generally have an organization that handles taxes. And in New Zealand, for example, we have the organization called the IRD, or Inland Revenue, and some other examples of these organizations from different countries. I know in America they have the IRS. I don't know off the top of my head what that actually stands for. I know in Australia, I think they have ATO. I think that's the organization that handles taxes for Australians. And I'm pretty sure it's similar in most Western countries anyway, like Australia, America, the UK. But you are given a number by your tax organization. So for example, in New Zealand, we get a IRD number, and everybody is given one of these so that way the IRD can keep track of the tax you pay and entitlements you receive. And each country is a little bit different on how they tax their citizens or their residents. So on the screen right now, I'll be leaving the New Zealand tax brackets. I might also put the Australian tax brackets on the screen too, so you can kind of see the discrepancy or compare them. So let's give a little bit of context for these tax brackets. And I'm actually going to provide a little bit of a story here. So when I got my first job, I think I would have been nearly turning 18 years old, and I thought these tax brackets were kind of common sense, and I thought I had a pretty good understanding of it. And my logic was whatever annual income threshold I fitted into, I'd be paying a fixed percentage amount of tax on that income. So for example, I worked at this place called Zambrero. It's like a Mexican fast food place, very similar to Subway. And when I worked there, I earned $32,000 per year. So I thought that I would just pay 17.5% on any income that I generated, because I fitted into the threshold between $14,000 to $48,000. So if that logic were true, I would be paying $5,600 worth of income tax on this $32,000 per year income. But in actuality, I didn't actually need to pay this much tax. And the reason for it is how the tax system works is basically the first $14,000 that you earn in a tax year, we'll be discussing tax year shortly, you only need to pay 10.5% on that first $14,000. And then any income that you generate over $14,000 up to $48,000, you pay at a 17.5% rate. So therefore, during this time that I worked at Zambrero and I earned this $32,000 income, I would only be required to pay $4,621 in income tax. And if you work a job at the moment, or you've ever worked a job, you may remember that you were given this tax declaration form to fill out. And for this specific tax declaration form anyway, I think this is generally how it goes anyway, and I'm pretty sure it currently still is. You'll need to give them a tax code of some sort. And to me, tax codes kind of annoy me a little bit, as I kind of think they're unnecessarily overcomplicated. But regardless, to be simplistic, tax codes basically are just a way for your employer to figure out how much tax to deduct from your pay. Just so that way you won't have a big tax bill to pay at the end of the year if you haven't paid enough taxes. And alternatively, that way you don't pay too much taxes relative to your income throughout the year as well. And for a bit of context, I've mentioned the term tax year a couple times. So the tax year actually runs from the 1st of April to the 31st of March. It's not like the calendar year, where it runs from the 1st of January to the 31st of December. The tax year runs from the 1st of April to the 31st of March, which is quite an important thing to remember. So if you pay too much tax relative to your income during that yearly time frame of the 1st of April to the 31st of March, what will happen in New Zealand anyway is that you'll get a refund from the IRD. So for example, say you were to pay an additional $1,000 worth of tax throughout the year more than you were supposed to, you should get $1,000 transferred to your account of preference once the tax year is finished and everything has been filed and processed. Whereas if you haven't paid enough taxes throughout the year, you will actually get a bill from the IRD. And you'll probably have up to 1 year to pay that bill, which would generally be the 31st of March the following year. And it kind of goes without saying, if you weren't to pay that bill, there's probably going to be some sort of consequence or consequences. So that's a relatively simplistic overview of how taxes work. I think if I was to explain it to my 18-year-old self, that's how I would do it personally. And I'm sure most people already had an understanding of all that information, but I thought it was necessary. I want to make sure this video is applicable for everyone. So now I'm going to be moving on about how you can do your taxes as somebody that is self-employed, or in other words, working as a Uber Eats driver. So as you may know, as somebody that is self-employed, it is your responsibility to file and handle your own taxes. Because if you had a job before, or maybe you were employed before, you don't have an employer to do it for you. You are now self-employed. So there are a few different ways you can kind of navigate and do this, and I'm going to be discussing them and going into detail about the pros and cons of each one. The first way is doing it yourself. The second way is getting a specialist to do it for you. And the third and final way I can think of anyway is using a software. So if you do it yourself, I guess the biggest benefit is that there's a very low cost associated with that, if not any cost at all. So I guess that's the biggest pro of doing it yourself. However, I think there's quite a big con of doing it yourself, and that is the possibility of you making some errors, which could maybe get you into trouble. Now, moving on, if you were to have a specialist represent you, how would that go? So I guess the biggest pro associated with that is that you're much less likely to get into trouble or make errors when filing your tax return. And in addition to that, you might be familiar with the saying that a good accountant just pays for itself. And although I haven't personally experienced that firsthand just yet, I can definitely understand why that's a saying now after becoming a little bit more competent about taxes. But obviously with a specialist or a good accountant or somebody that's qualified, related to taxes represent you, there's going to probably be a high fee associated with that. And then with using a software like Hnry and Xero, I guess the biggest benefits about using them is that they're quite beginner friendly, but there are some cons and maybe some limitations as well. And I guess some cons are, at least for Hnry anyway, the software that I use, is that you continuously have to pay as you earn money. And obviously there's a fee associated with using a software too. Now, if you're one of those people that think, I don't really need to worry about taxes, I don't really need to necessarily understand them, I can just get, an accounting software to do everything for me, or just have a specialist represent me, I still think it's very important that you just have an understanding of how taxes work. I think it's going to definitely benefit you. So what I'm going to be doing for the remainder of the video is explaining details that I think are necessary for you to know, especially if you're an Uber Eats driver. Firstly, I wanted to discuss that there actually are some tax benefits that you can get as somebody that is self-employed if you didn't already know. And the reason for that is because if people are to start businesses, it's probably going to yield the government more tax revenue. Because think about it, if more people are working jobs and more people are generating more income or higher incomes, they're going to make more money. So in New Zealand, and what most governments do from my understanding, what will generally happen is governments will give you access to different benefits or opportunities that you wouldn't be able to otherwise access if you were, say, just regularly employed. And as an Uber Eats driver, you are self-employed, which technically means you have your own business. So you are able to access or receive some of these potential tax benefits. And I guess in order to access these benefits, or in other words, claim these expenses that you could be eligible for, there are a few crucial things you need to do specifically as an Uber Eats driver. The first, and probably most importantly, is keeping a logbook. And the other one is taking photos of any receipts that are related to your car in order for it to operate. So for some context, the reason why you need to keep a logbook is so that way you can display the mileage that you use your vehicle for business use, or alternatively, the frequency that you use your car for business use. And depending on your circumstance, one of these is going to be more advantageous for you to do. And I think the best way for me to explain what is going to be more advantageous is just giving you an example of my personal situation. So this tax year thus far, from the 1st of April 2022 to today's date, the 6th of January, I've driven my 2009 Honda Fit a total of 20,736 kilometers for business use. So what does that mean? Well, every tax year, the IRD, and I'm sure most other tax organizations do this too, is every tax year they'll display what the kilometer rates are for business use. So you can see from this example, during this tax year, you are eligible to claim 83 cents per kilometer up to the first 14,000 kilometers within the tax year. And then anything over that 14,000 kilometer distance within the tax year, you can claim 31 cents per kilometer for petrol or diesel vehicles in this case. So doing the math from my personal situation, because I've driven 20,736 kilometers this tax year, that means I would be eligible to claim $13,708. So what does this mean? Well, initially, I actually thought when I was a bit younger that I would be able to claim this $13,708 in my bank account, but unfortunately, that's not quite how it works. I think the best way for me to explain it is giving a hypothetical example. So for this example, I'm just going to be assuming that I was to earn $40,000 in income this year. So if I was to be earning $40,000 in income this year, and I was eligible to claim $13,708 in claimable business expenses, this would pretty much just mean rather than paying $40,000 worth of taxes, I would only need to pay $26,292 worth of taxes, which would quite significantly reduce the amount of income tax I would need to pay. Now, alternatively to claiming kilometer rates or mileage, you can actually claim expenses in an alternative way as an Uber Eats driver, and that is by claiming the frequency that you use your car for business use, which is a little bit more confusing and probably requires a little bit more admin, but it could possibly save you a little bit more taxes depending on your situation. So looking at the IRD's website, it states that you need to display the frequency that you use your car's vehicle for business use for at least 90 days, and whatever percentage or proportion you come up with during this 90-day period, it's not allowed to change by more than 20% in 3 years. So this tax year, I've personally figured out that there was a 90-day period where I drove my vehicle 87% of the time for business use. However, that 90-day period was somewhat indifferent compared to what my regular vehicle usage percentages for business. So I think it's kind of fair, ethical, responsible that I only were to claim 80% of the frequency I use my car for business use, which pretty much means I would be eligible to claim up to 80% of any expenses related to my vehicle in order for it to operate. So for example, this is things like insurance, this is things like gas, repairs, maintenance, etc., etc. In addition, you can also claim depreciation as well, where I believe you can claim up to 30% of the car's value every year. And I've calculated throughout this tax year thus far, I think I've spent in the range of $8,000 on my car thus far. So therefore, thus far, I would only be eligible to claim $6,400 if I was to claim the percentage that I use my car for business use. So from doing all those calculations, at the moment, it's significantly more advantageous for me to claim mileage or kilometer rates compared to if I was to claim the frequency that I use my car for business use. All right, so before I move on, I also just wanted to say, in addition to some people that are maybe recurring viewers that have watched this video on my screen here, where I made a full in-depth tutorial about how you can become an Uber Eats driver, I guess. Now in that video I said, and I had the belief, that whatever option you did choose, you couldn't change which option you did unless you completely changed your vehicle. And at the time I had that belief because I messaged someone from the Hnry team, this would have been about a year and a half or so ago, and I just interpreted it as that you just couldn't change it unless you got an entirely separate vehicle. And I'll just go into depth a little bit more about what I mean by that. So for example, for me, right, I drive my 2009 Honda Fit, and last tax year I decided that I would claim the frequency that I use my car for business use and not mileage or kilometer rates. So I had the belief that for the duration that I had my 2009 Honda Fit, I couldn't change to claiming mileage or kilometer rates even if I wanted to. But I messaged somebody from the Hnry team talking about my situation. I was telling them, I think it would be more advantageous for me to claim mileage because of, X, Y, Z and all that kind of stuff. And the response was that you can actually change to claiming mileage if you'd like to. So basically what I'm trying to say is, if you did watch that video, I just kind of wanted to apologize just in case I provided maybe some wrong information. But to my knowledge now, you can change it if you would like to, if it's more advantageous for you. And also on the topic as well, if you do think I have got any information wrong in this video thus far, please leave it in the comments below or maybe send me a message, because at the end of the day, the objective of this video is just trying to help people understand how they can do the taxes. So I'm more than open to receive some criticism, or if you think maybe something is wrong. And I thought something that would be a good idea to do, and a lot of people would appreciate, is if I go into detail about my previous tax filings and tax returns that I've done. So let's discuss my first ever tax year as somebody that was being self-employed. So this tax year ran from the 1st of April 2020 to March 31st, 2021. Now, during this tax year, I made $15,000 in self-employed income. And majority of this income that I actually earned was from the government because I qualified for the subsidy at the time. Because during that period, if you remember, in New Zealand anyway, we were in lockdowns. And at the time I was working as a door knocker and I wasn't able to work, of course. But during this time, I didn't know and understand how to pay taxes as somebody that was self-employed. So I suppose somewhat naturally, I didn't really pay attention to taxes. And I always thought I would just stall and just figure it out when it became a bit more of a problem, which in hindsight probably wasn't the best approach. However, I eventually did find out that I would have 1 year to kind of sort out all my taxes after March 31st, 2021. So basically, if I had a bill to pay, which I knew I was having to pay taxes at some point, I would have to pay those taxes by March 31st, 2022. So I found all that out, so I kind of stalled a little bit longer. But everything changed a little bit for me when I got my restricted license in mid-2021, and I quite liked driving. So what I did was I became a delivery driver. So I started to work for Deliver Easy. And at that time, I was getting quite annoyed because I really wanted to figure out and determine, how can I do my taxes in the most optimal way? And after asking quite a lot of questions and doing research online, I came across two of these specific accounting softwares. They were Hnry and Xero. And I quite liked Hnry. I thought the interface and experience looked pretty simplistic. And also in addition to that, I saw that they file your tax return at basically no additional charge. I'm not too sure if other accounting softwares do the same thing. I assume they do, but I opted to use Hnry regardless. And what I did was during that time is I requested if they could help me file my tax return during the year of April 2020 to March 31st, 2021. Now, because I hadn't been using Hnry from the tax year between April 1st, 2020 to March 31st, 2021, I needed to pay Hnry a fee for that service because I hadn't actually been using Hnry during that time frame because I'd signed up in June 2021. And I was more than happy to pay for that service just to get it done with and to ensure everything was done correctly, because that was my first time and experience filing my taxes as somebody that was self-employed. And from memory, I'm pretty sure I had a tax bill to pay of just over $1,000. And I remember paying that bill in very late March 2022, just before the deadline. So that was my first year ever filing my taxes. And I'll also discuss my most recent tax filing from April 1st, 2021 to March 31st, 2022. So I signed up to Hnry, the accounting software, in mid-2021 after I got the gig of working for Deliver Easy. And when I signed up to Hnry, I let them know that I had made $5,000 in income. And I let them know this because Hnry will actually deduct your income tax every time you're paid according to what your projected annual income will be. So during the 1st of April 2021 to March 31st, 2022, Hnry helped me file my tax return and I had made $30,745 in income and I had $7,833 that I could claim as business expenses. So last year, my taxable income, or just the amount that I had to pay tax on, was $22,912. And I would need to pay that $3,012 by March 31st, 2023. But I'm up to date and I've actually paid it all off a couple months ago. So I hope that you found that quite helpful and appreciate the transparency. And now what I thought would be a logical thing to do in this part of the video is go into detail about Hnry's service. And I think I can explain it quite comprehensively and in a very simplistic way after using it for a year and a half now. But before I do talk about it, I can understand that this might be interpreted as like an endorsement for Hnry, or that potentially I'm advising you to use it yourself. And to respond to that, that's not what I'm trying to do here. There are plenty of alternative accounting softwares you can use, like Xero, for example. From what I know, I think they're the most popular and most mainstream accounting software out there. And the reason I'm just going to discuss Hnry is because I use Hnry and haven't used another accounting software. And in addition to that, I actually don't think I mentioned this video is not sponsored by Hnry, but I will actually go into a little bit more detail about this. Hnry does have a referral program, and I will put my Hnry referral link in the description. At the moment, Hnry's referral program consists of this. So if I were to sign somebody up to Hnry, that means both you and I receive $25 in Hnry credit. And if you're confused what Hnry credit is, basically how Hnry monetize their service is they take a 1% cut of the income that you generate throughout the tax year. So for example, if you were to make $50,000 throughout the tax year and you want to use Hnry as your accounting software and have them file your taxes, etc., the service will cost you $500 per year because 1% of 50,000 is 500. So if you were to get a $25 free credit, that would just mean that you only need to pay $475 for the service if you were to earn $50,000 a year. And furthermore, I've actually made a video about Hnry in the past. And from that video, I did refer quite a few people to Hnry, and my current Hnry fee credit balance is $3,482. And Hnry actually has a cap of $1,500 in order for you to use their service. So if you were to earn over $150,000 per year, you won't pay more than $1,500 a year for their service. So at the moment, for me to use Hnry, it doesn't really cost me anything. And the reason why I'm going into detail about all of this in the first place is, one, of course, I think people will appreciate the transparency. And secondly, and probably more importantly, is I've actually contacted Hnry and I've been in discussion with them if they can set up maybe an alternative referral of some sort. So basically what I'm trying to say is, depending on when you are watching this video, there is a possibility that there could be a different referral benefit. So now let's talk about Hnry and how I use it. All right, so this is my Hnry dashboard. From what I know, by the way, I'm pretty sure Hnry service is available for both New Zealanders and Australians. So if you are from Australia, this service could be a potential option. So you can see here, I've inputted my email address. I've also inputted my date of birth and phone number in addition to my home address as well. And you can see at the top here, when I go from profile to financial, here it displays my Hnry bank account name, which I've just put as Jack Hammond, and it will also give you your Hnry bank account number. Now, there is an option here to use quotes. Personally, I don't use quotes for any of my business activity, I guess. I'm sure they'll generate some sort of quote template for you based off your details that you've inputted into the Hnry software. And actually, I'm going to be sharing a template example in just a second because I'm going to be going over here to the invoice feature. So here I've actually sent a couple invoices. I sent a couple invoices to MoneyHub when I was making some videos on behalf of them. And what you can do is send invoices to your clients. So when you navigate to the clients tab, you can see here I've got a couple clients. I've got MoneyHub, and I've also generated this client called John Smith. So you can add a new client and also input their email address here. So when you want to invoice your client, you can do so here. So if I go back to invoices and I click new here, what I can do is I can select or search for a client, and you can see here John Smith will appear. And let's say hypothetically John Smith wants me to make 10 TikTok videos for him, and I'm going to be charging him $10 for every single individual TikTok video. So you can see the amount that would be down here. And if I was to change this to say 20 TikTok videos, then the price would be $200. And I can also change the price here. Say I make it to $15 per video, then the amount would be $300. And if you click this option called preview, you can see all of these details and what the invoice is actually going to look like. So it will say the invoice for this specific reference number at the top, and at the top of the invoice, it will say your name and also your New Zealand business number if you decide to input that as well. And then it will also display when the invoice is due by. And at the bottom here, it will also say your account name. And in addition to that, it will also say your Hnry bank account number, which is displayed down here for me. And this is what would be included in the email that you send to John Smith or whoever your client is. So for all of my different various income streams, I will indicate that I want them to pay me through this Hnry bank account number. So that way all of my income streams are tracked accordingly in one single place. So for example, I've set up both my Uber Eats account and DoorDash account to pay me into my Hnry bank account, not my bank account that I use for everyday banking. So moving on to payslips. So you can see all of these different payslips that I've accumulated from working for Uber Eats and also DoorDash here recently. So if I click the most recent payment that I received from Uber Eats, so this most recent payslip, I got this on the 4th of January, 2023, and you can see the total amount that I made was $1,060. And you can see here, Hnry has deducted what they are projecting my annual income tax rate to be towards the end of the year. So that way I don't have a significant bill to pay. And also that way I'm not paying too much income tax relative to my income. So if we were to do the math, my math isn't the best because I went to public school, but right here, they're deducting about 12% of the income I make in this specific payslip. Now you can see ACC here. If you're unfamiliar with ACC, basically what it stands for, what I think it stands for, is accidental compensation cover. And just as it sounds, it's a organization that will cover you if you have an accident for over 1 week and pay you out weekly based off what your annual income is. So for example, I actually got a concussion in mid-April 2022, and I actually couldn't work for nearly 2 months. So I was eligible to receive ACC payments, and the payments I received came every single week based off what I had earned or what my taxable income was the previous tax year. So from the tax year of April 2021 to March 31st, 2022, if you remember, I had earned about $22,000 in taxable income. So pretty much what ACC would have done is they would have divided that $22,000 amount by 52 weeks of the year, I imagine, and then they paid me every single week 80% of what that amount would have been. And from memory, for me at the time, it was about $250 to $300. So during the time frame of April to about June last year, I wasn't earning a significant amount of income because it was predominantly just ACC payments. Hopefully that explains ACC. And you can see here, I don't know what the exact deduction is relative to my income of how much ACC I need to pay. I'm sure it's on this site, but I don't pay too much attention to it. If I was to do the math relatively quickly, I imagine it's probably just over 3% in this case. And the last deduction is for Hnry fees. And remember, this amount is 1% of the income that you make. So if I didn't have a significant Hnry fee credit balance, I would have been paying about $10.60 in fees for Hnry service from this example. And then you can see the income that I actually get after tax. So this money actually gets transferred to my bank account that I use for everyday banking, and that will usually come in within the business day. Now, moving on, this is the place where you can add your expenses. So you can see here, if I scroll down, I have about 5 pages worth of various business related expenses. Now, I actually need to do some updating for these various expenses that I've uploaded, and some of them are not up to date, but I'm just going to click on one random example and just go through it with you so you kind of have an understanding. So I've listed this expense as a motor vehicle expense. You can see here I've got my receipt. This is a gas receipt that I got from probably a Z, I imagine. You can see on the right I have my receipt here. If I click view receipt, you can see what it looks like. So I imagine this was from probably a Z somewhere, and the total amount was $34.96. So if I close that, I also inputted the expense date here, which was on the receipt for the 17th of November, and the total costs, as you saw in that receipt, was $34.96. And there's also a question here saying, is there GST included in the price? In this case, there was, and I inputted the GST amount included, which was $4.56. And if you remember, I use my car 80% of the time for business use, so I displayed that here, which would mean the total claimable amount that I'll receive from this expense is $27.97. And then I just put the description of business purpose here, which I just put down as Uber Eats. And then there were a couple other additional things I wanted to go over quickly. So if you click my account here and scroll down here to reports, you can see this option to look at your current financial year to date. And this is going to download a PDF file for you. So if I click this here and then click the download down here, you can see the income statement prepared for me from the period of the 1st of April 2022 to 8th of January 2023, which is today's date. And then it will also display your IID number here. So if you're wanting to send, say, an income statement for whatever reason, maybe you're wanting to get some sort of loan, or you're wanting to prove that you make this kind of money, this is something you could download as a PDF and display. So let's look at some of this information for my personal circumstance. So from April 2022, my taxable income for that specific month was $1,370. And then the following month was $928. And if you're wondering why my income was so much lower relative to the other months, was because during this time frame I had my concussion, and predominantly all of this income that I generated was from ACC. And then you can see at the bottom the total amount that I made in income thus far throughout the year from the 1st of April to the 8th of January. And then you can see the total income tax that I paid. In addition to that, you can see the total ACC that I paid, and also the net pay that I have received. And you can also see the expenses here that you've uploaded to Hnry. So personally, I need to upload a few more expenses. I haven't uploaded some expenses. For example, I got my car service relatively recently, and there were a few additional problems. So I had to pay about $800 for that car service. So that's just an example and something I would probably upload here as an expense, because that service is relevant for my car, because I need my car in order to operate, and 80% of the time I use my car is for business. So this is something I can upload here as a business expense. And you can see from the business expenses that I've uploaded to Hnry, my current claimable amount for this year would be $6,512. And I'm actually going to show you my asset register just in a second. So if I exit out of this and I go to my asset register, and I'm not entirely sure about this, but if you are claiming the frequency that you use your car for business use, I think you can claim depreciation. I'm not sure if you can do it in addition to claiming kilometer rates or mileage, but anyway, in this case, I have it all set up here. And if you remember me saying the amount that you can claim in depreciation, it's 30% year over year, as Hnry have displayed here. Now, I bought my car for $4,750, and this first line is a little bit off, I think, because I built my car at kind of a weird time, and I'm not too sure. So I'm just going to write off this first year. Let's look at this next year as a better example. So at this time, my car's value, or the opening value, was $3,681. So what I could do is I could claim depreciation. I could claim 30% of that, which would be $1,104. And then the following year, it'd be valued at $2,576. But I could claim 25%, or it's displaying here that I could have claimed 25% of this $1,104. Now, I use my car a little bit more for business use than this 25% that Hnry is indicating. I'm not too sure why it's only 25%. It probably should be around 80%, but this could mean I would also be able to claim this total amount if it were 25%, but because it was around 80% from memory, it would have been significantly more than this $276 amount. So hopefully that's a decent overview about how you could, potentially claim depreciation. And actually the final thing I wanted to go over is just this option where you can ask Hnry questions. So Hnry get back to you relatively quickly with any questions or inquiries that you do have. So if you're stuck with something, or maybe have a question related to taxes, this could be a really good location to ask a question. And hopefully that explained everything in some pretty good detail. Now, before I conclude the video, there were two additional things that I wanted to mention that I felt were worth mentioning, but I haven't mentioned in this video. And the first one is discussing GST, or goods and services tax. Now, you may or may not be familiar with GST or heard that term before, but the thing is, and why I didn't talk about it in this video, is because I am personally not registered for GST yet. It's something I probably will register for the following tax year. I don't think this year I need to necessarily register for GST, and I don't think it's advantageous for me to register for GST, but it's something I need to learn a little bit more about, and I don't really have a comprehensive understanding about it. So I thought it wasn't really mentioning or worth mentioning going into detail in this video about. But from what I know, I don't think GST is that complex. I think it's something you can definitely educate yourself about. And if you're wanting to educate yourself about it, I already have plenty of resources discussing how it all works. And the other thing I didn't discuss or mention in this video is secondary income tax. And this would occur if you were, say, working an employed job, but in addition, you were also working as, say, an Uber Eats driver or somebody that was self-employed. And I didn't discuss it because throughout the duration of the past, 2.5 years as I've been self-employed, I haven't worked a employed job. And I'm actually not that familiar, and I don't know the most optimal way of how you would go about filing your tax return in this situation. So for that reason, I didn't mention it and go into detail about it in this video. But again, like GST, I guess it's something you can educate yourself on. They have plenty of resources talking about it. I've just Googled it right now. So if you're curious about those two things and why I didn't mention them, that's why. Also, I thought I'd mention, if you're considering becoming an Uber Eats driver, I'll leave my Uber Eats referral link in the description. And if you're curious about the income that I actually do make as an Uber Eats driver here in New Zealand, I'll leave some videos about it here on the screen.